Hello, folks. Welcome to Market Trends. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. Today is Tuesday, October 2nd, 2025. Welcome to the fourth quarter. I'll just show you a few disclosures. Now, don't forget, you can go to tradestation.com and you can see a blog post we have today. Today's subject is small caps versus emerging markets. And just show you some standardized returns as well for some of the ETFs that we are going to be mentioning. Remember, you can get a link to the prospectuses in the description of this live stream. There's some of those ETFs. And now today I'm going to go to this special chart. We're going to talk about this a little bit. But first, let me just show you, if you're on tradestation.com and you scroll down, you can see small caps versus emerging markets, today's presentation. Now, what's interesting I want to mention is, well, first of all, we have a new zip file. And in that zip file, we have a new workspace, which is called, I just named it with today's date, 2025, basically, 2025, October 2nd is basically how I named it. EEM versus IWM. So I want to just kind of point that out. If you want to take a look at this, this is the basically the special workspace we have. And so basically, it is in that zip file. When you go into that zip file, it has a series of ELDs. Those ELDs have special indicators in them, and you import those indicators into your workspace. And after you import them into your workspace, you can then turn around and use the workspaces. Although this new workspace we actually included does not have any special um, studies in it. It has an interesting chart, but none of it requires the custom studies we normally would talk about. So, on Monday, in our state of the market, we talked about gold. Well, recently, not Monday, but in the last couple of weeks, we said the three G's, which was global, gold, and growth. And that is pretty much the way things have been playing out. Gold today is pulling back, but it has extended from the times we talked about it. Global and emerging markets have really been moving. That's one of the reasons we wanted to talk about that today. And growth stocks have been breaking out, as we discussed in the last few webinars. We saw that rotation. And so I think it's important to see that. And I'll just say overall, everyone was talking about small caps kind of coming into, the last, this rate cutting cycle and everything like that. And you know what? Like many things, a watch pot never boils. The thing everyone expects is not necessarily what seems to be happening here. So we look at IWM versus EEM. I'm going to just make a new little list down here. You can see this, but IWM versus EEM. Look on a year-to-date basis. Emerging markets are really crushing the Russell, and any kind of time frame that has a kind of recency to it really shows the 1 month totally outperforming. The 1 week outperforming, the year-to-date outperforming. So this is showing us that there are some interesting things happening. And I think it's just important because everyone thought that a dovish Fed was going to be good news for small caps, but they kind of forgot about that other guy, emerging markets, and we're going to get into that. But I think that's something that we want to kind of be aware of going forward. Emerging markets have run, but the fact is that they have been moribund for 15 years, and more than that, probably about 15 years. And basically, now we're at a spot where they seem to be, under accumulation. Um, so overall, I'm going to take a quick look at the chart here, the S&P 500. On Monday, in State of the Market, we had basically said the S&P, we thought there was that potential right here. Monday was right, this candle right here. So in that candle, we basically said, we might kind of grouse around. I love that word, grouse under 6650. And that's exactly what happened. We probed under 6650, held that 8-day exponential, and then extended. So this is what we expect in a low volatility stock pickers market when all the short term, I can't really see many indicators now that are pointing to the downside on the short term momentum. I'm not aware of any in any meaningful way. So I think that's interesting. And what's interesting about today's price action is if you look, we bottomed a couple of points above the high of that big candle on the 30th, which was the end of the quarter. So it's interesting to see today's low is the high of that day. So I think here we are up for the fifth straight day. people might look for just a day or two of red and then continuation. We talked about on the weekly chart, the S&P 500 basically had one negative week, and then it's gone like three positive, one it's like three green, one red, three green, one red, and there we are. Last week was slightly red, and now we're back in the green. So we'll just note that is what a tight market looks like. That is what something when there's a low volatility uptrend stock pickers market looks like. The indexes make small moves, grinding higher, making small moves, while individual stocks make big moves, and we're going to get to some of those. But I wanted to just kind of mention that's the phase we're in. If we look here at at our actual article, we just mentioned a few things about, like, for example, the fact that the S&P 500 held that level, the 8-day exponential, the Wilder's RSI. This is what we're talking about, how much this looks like like 1995, 96. RSI just like stayed over 50. I mean, I think back in that bull market, it went under, like, I don't think it went under 53. That might have been the level, but basically RSI goes overbought, pulls back to 50, 60, goes back to overbought, and it just stays there on end. And the 9-day rate of change is a very useful indicator in this market. What you basically see is, the market really doesn't go deeply negative for a 9-day period. And that's what's cool about this indicator. You can kind of see, when it gets down kind of around zero or so, the buyers come off the woodwork, which means that we never really string together any period of time that is consistently negative for 2 weeks. So I think it's a very interesting way to kind of look at the market. Also, what's very interesting is if we look, we can actually see. I'm going to jump over now to this workspace, but we got a breakout in the healthcare ETF, and there was a bunch of news on healthcare. But XLV had a very interesting sort of move when it broke out above this level from back in April. So in some ways, I think that is also kind of contributing some. It's a relatively big sector, and it has been very weak for a long time. And if we start to see a degree of strength in this part of the market, it could create a different kind of environment. So I think it's important to realize that's happening. And I also wanted to say that, on Monday, I was kind of looking at energy stocks. I want to actually kind of say that that doesn't seem to be kind of working out very much. It's very unclear, to be honest, what on earth is happening with OPEC. And, there's all this stuff about Russian refineries being shut down and how that was not just the refineries, but like the export facilities and all this stuff. And there's been some real conflicting news on it. But I think at this point, energy, ultimately, like we've said, it has a real structural kind of issues of oversupply going forward. And so, from my view, some of the things that look like they were pointing in a positive direction, I'm just kind of, not as sure of. So I want to just mention that we had talked about it on Monday, and it doesn't really seem to have that kind of, you know, um, credibility like it seemed like it was going to have potentially. So now let's look over here at the small caps, some of the key points we wanted to cover. So, interesting thing here. If you look at, I'm going to bring up this other workspace, which is my state of the market weekly chart that we show on in our state of the market on Mondays, and the weekly chart here, the dollar index. So the dollar index is now on track for its worst year-to-date performance in a while. We talk here about it basically the worst year-to-date performance on pace for its worst year since 2007. So that's something. Now, what's interesting is the OECD was basically talking about the rest of the world outperforming the United States for a while, and next this year and next year. I think it's interesting because that has not been the case for a while, and one way or another, however it's working, there is now this idea of people moving to a certain extent away from the US dollar as a financial instrument. But then we also have the fact that the American economy, while it has, certain areas of strength, there are other opportunities for growth in other parts of the world, especially these kind of, people call them frontier markets. But I mean, I personally look out and I just say, as if I'm a growth investor and I look out for the next 10 to 15 years, and you want to see where is the real, just pure growth going to be, it it seems like, and this is what people see, Indonesia, India, Africa, these countries, they have people going from kind of, you know, developing world status to entering the middle class. And as that happens, there's just a kind of consumption like the United States or Japan in the 1950s. And maybe the United States more like in the 20s, but still the thing is you get a kind of growth of demand and economic activity, and the kind of the leverage that delivers can be considerable. So I think as you look out, that kind of emerging parts of the world, those parts of the world are now activating and coming online. And like I said, a lot of them are coming online with Chinese technology and Chinese products, and that's going to be an area of growth. So I want to just say that's one of the things that's happening with emerging markets here. So also, let's look at this workspace that I included. This workspace is very interesting. What it has is if we go to our data here, you can see it has two symbols. It has the EEM, the emerging market ETF. It has the IWM with the Russell 2000. So what I did was I put these two in here, but what I did was I moved them to the lower. Normally your main symbol is on top, but you might not know this in TradeStation, you can move them around. So the dominant symbol is, wait, is it this one? Yeah, the emerging market. This is data one. It's the primary symbol on the chart. So you can see up here, it's also in this little box. So it's interesting now is you can go to scaling and you can move it around. I moved it to subgraph too. So you might not realize this, but you can make a chart. You can bring up like any old chart, and you can basically, if you want, you can put MACD above the price chart. You can move MACD to subchart one, and you can move the price chart to in scaling to subchart two, and you can have a chart with the oscillators on top or anything crazy you want. You might not just realize is that when you customize the symbol, you can say where you want it to go. When you customize a study, like if it's a study, then you also go to customize study, but both of them have the scaling tab in the customization box where you can do that. So what I did was I first started out with EEM, and then I imported, then I also added, I went to data, add symbol, and I went to add IWM. Then what I did was I set both of them to the lower chart, to subchart two. And what I did was I put them on different axes. So you can see that this one here is basically the scaling is set to left axis on the EEM, and the scaling on the IWM, which is this kind of amber, I put this on the right axis. So you can see here what I did was that way I can have this one's in the 220s and this one's in around $50, and you can basically have them on the same chart without having this, the kind of issue when the axes conflict and they all look different and crazy. They can look nicer on top of each other. And I also like it because I don't always like using percentage charts, even though you can do them. The problem with percentage charts is you end up also with the starting point crisis, as I kind of call it, and you end up with the situation when they go all over the place, and one is way up and whatever, and you end up with weird scaling issues. So when you're doing something like this, it can be interesting to think about using simple price and having a right axis and a left axis. So now we have two pieces of data on the chart. That's what we have. Now, what did I do to kind of work with that? Well, I added now a study called spread ratio, and it basically what this thing does, and you can look at the inputs of this, is it has data one and data two. Now, like I said, EEM is data one and data two is IWM. So what I basically did was I just went and it took those in because they were already on the chart. And then what I did was I went to style and I moved it up. I'm sorry, I went to scaling and I moved it up to subgraph one. Anyway, this now shows the ratio to kind of summarize this. This is now also just so you realize the time frame is set to monthly. There's a monthly chart showing a long way, all the way back to 2004. So what do we see? This is the EEM divided by the IWM. And you can see basically that since 2010, the emerging markets have totally underperformed. But what is interesting here, since 2022, they've more or less stabilized. And I think if we do a little like line here, you can kind of see. I mean, I'm not always like totally using trend lines for things like this, but it just kind of show that we had a line here, a downtrend that is kind of fading, to varying degrees. So I'm going to style really quickly. I'll make this like a thick white line so you can see it more easily. And so anyway, we now have a downtrend that's kind of stalling here. And so I think we have a spot here where the ratio between these two is no longer in a downtrend. And if we look on a year-to-date basis, if we look at the news flow, we look at the things that are happening in the world, there could actually be an argument here, that this is a new kind of phenomenon now, that the marginal dollar, is flowing toward emerging markets. And I say that because, we all kind of have our standard, your standard investor is just S&P 500, NASDAQ, large cap growth. We all know that. But then when you look for your beta, you look for your thing that's kind of exciting, the thing that's going to maybe, not your beta, so your alpha. You're looking for your thing that's going to give you that edge, something else that might be that big outperformer. Well, a lot of people were believing it was going to be small caps. A lot of people you watch on CNBC or other kind of commentaries, they're like, this is the year for small caps and blah, blah. They've been saying this for like 5 years now. But regardless, the thing that's often most interesting is the thing that surprises you. And that's what emerging markets are doing here. I don't think a lot of people expected it, which makes it all the more possible it will happen. Now let's take a look here at the weekly chart of the RUT. You can say this is stuck in a rut, kind of. RUT, right? Anyway, it's stuck at this same level where it's been now, all the way back to 2021. Now, if you look at the EEM, now the EEM in many ways is lower than where it was. But what matters to me in many ways is that it's way above where it was last October, while the Russell is not. The Russell is stuck more or less at this level from last year. And the short term, intermediate term momentum now, in many ways, is very much favoring the emerging markets. The other thing to think about it is that with the weakness in the dollar, like we've seen, this kind of, struggling here. And, like I said, the dollar has issues because it's all about the euro, and the euro has its own issues. So we might not see real downside in the dollar index, but we can still see outperformance in weak dollar assets like emerging markets, and that's what seems to be happening. So anyway, I want to kind of point this out here because what we essentially see is that we see in the intermediate term, which is the same thing we're seeing over here on our year-to-date basis. What we're basically seeing in MT main key ETFs is we're seeing the year-to-date outperformance, the 63-day outperformance, the 21-day outperformance. All those intermediate term trends are showing that overall strength. If we also look here, for example, at EEM, this made a 52-week high today. Look at IWM. It hasn't made a 52-week high really. I mean, it barely made a 52-week high, back on September 23rd, and it hasn't managed to follow through. So this, I think, is the basic thing I want to say, that we actually see the chart, the price action are kind of telling us that the Russell and small caps are stuck and emerging markets are running. And I think that's an important thing to kind of recognize, because there are those, you're looking at that second bucket in people's portfolio, the area where you're looking for that extra degree of alpha. It seems to be these emerging market sort of indexes and individual names, as we're going to mention a few. Now, I'll also just mention very quickly, the PE ratios are comparable. The dividend yield is higher for emerging markets. And what's also interesting is it holds much bigger companies. Your Russell small caps has a lot of kind of, some of them are very strong outperformers, but the biggest company in there is 25 billion. Well, in the emerging markets, there are multiple companies that are much bigger. Like Taiwan Semi is over $1 trillion. So you have these other companies out there. So I did want to mention that because in many ways you're dealing with companies that are more established and kind of potentially, one could argue, kind of more credible, more likely to be established over time than the American small cap. So yeah, they're overseas and maybe there's risk in that. However, they're much bigger companies, more banks in there and things like that that are established major banks and major institutions of big countries versus small marginal companies in the United States. So that's a way to think about it. So anyway, I think that's important. And I'd just say, like everyone thought it was going to be the um, the the Russell this year, and I'll just say I remember 2003. There was this thing called SARS, and like China. Everyone thought China was like going to be in a terrible situation, and coming out of SARS, it was a total outperformer. And I would say right now that everyone would have thought that putting tariffs on China was going to be horrible for China. And then, surprise, the opposite thing happened. So I think it's important just to realize that this is somehow how, sometimes how markets actually behave. All right. So, down here we have our upcoming events, but, it looks like we're not going to have payrolls tomorrow because of the government shutdown. I think we're going to get the Treasury auction, and I would imagine we'll get the Fed minutes. The Treasury auction, I think they have to just do to keep the government operating. But I think it's going to be important to watch. The last few Treasury auctions have not been good. And the overall thing is this does kind of fit into the idea of people moving assets overseas. If there's not strong demand for Treasuries, well, it's kind of interesting how this emerging market outperformance is happening at the same time treasury demand is weakening. Just, there you go. But I think that there does seem to be this shift now, and the treasury auction is having to think about the FOMC minutes may be important, but anyway, who knows about these things? The first earnings are Delta and Pepsi end of next week. The following week, we get into the big part of earnings season with the big banks and stuff like that, and we'll of course be talking about that when the time comes. All right, so, like I said, we're in the stock pickers market. Our volatility chart, as we always show, this part of the market where we basically have less correlation. And this period of low correlation can last for a long time. So, I mean, there's, just to realize that we can kind of have the market just sit here, sit near highs, and then other sort of things be happening. So, today we actually did a trading view idea on Meta, for example, and just mentioned, I just saw an alert pop up. Let me see. I'm not sure what this might have done, but we did an alert on how this was oversold. And the other one I mentioned here is also Amazon. Both of these are kind of, oversold, um, and just kind of holding the 100-day moving average. So I want to just kind of mention that these are some of the things where people might kind of say, wait a second, Meta reports earnings in a month, and the last one was, maybe good and things like that. And people have that potential to start saying, you know what? Maybe things aren't so bad. And then also you have the potential to get analyst reports saying, hey, you know what? This stock is potentially interesting going into earnings. We're at that spot now. We're holding these, this kind of intermediate term level. People might start to actually see opportunities in some of these large names like Amazon and Meta that have pulled back. All right, so like I said, stock pickers market, and I'm scanning around looking for different sort of things that have been outperforming. And I'll tell you, this is a stock I've been watching, and this is the way they are when they just fly away from you. And this stock is called Ondas Holdings. They do like drones and for military purposes. And I don't see any news today. This was one that I actually looked at yesterday, and I was like thinking of buying it. Why? Because it hit the 8-day exponential. You see the blue line there. Like I said, we have this. Our if you go to MA Tools, I want to just remind you guys that this MA Tools workspace, you can actually see here. See, it hit the 8-day exponential, and it also hit that yesterday. Today it's far above it, but yesterday it had that signal. So I want to just kind of point that out that some of the names I'm talking about here, we can use the workspace, the MA tools to actually see some of these opportunities. So ONDS, I want to just mention this is one also that it's running here, but the thing is, relatively small growth name. The thing is look at it basically has a periods of consolidation. And who knows, maybe it kind of holds here, chops for a few days, that 8-day catches up. Maybe it comes down, toward 8.5, 8.25, and then that 8-day catches up. That's the sort of thing where if you're using your workspaces and looking for things, these are the sort of names that have been moving. And I think it's interesting because we really do have this emerging defense tech thing going on. And it's not a surprise. I mean, there are significant changes happening in the science of war. If you actually look at what's happening, some of these things that have been happening recently. So these companies are an interesting spot for some of those. Now, another thing that was popping up to me is Grab. This is an Asian company. It operates kind of around various Asian countries like Singapore and stuff like that. But it's kind of like a cross between Uber and DoorDash and stuff. But I mean, it's one of these companies also that's interesting about it here is if we look at it, what is it doing? It basically pulled back and it's hitting that. Well, today it's actually between the 21 and the 8-day exponential. I did this using one of the tools with the workspace we give you and the indicators in there. It actually popped up. I have a scan set up. I'm not going to get into it now, but it finds stocks that hit a 52-week high in the last 21 days and have pulled back in the last 2 weeks. And I did that using the days since 52-week high and something like the 5 or 10-day change in scanner. And this one popped up, and I thought it was very interesting. If you look at the weekly chart of this, you can also see it's consolidating above its high from back here in 2024. I mean, this is a name that basically pulled back really hard during the kind of the bear market of 21 when the Fed was hiking. It was one of these names that popped, rallied in the COVID period, got smashed from the Fed hiked rates, and now it's fighting its way higher. I think this one is interesting also because it has that emerging market angle, the Asian angle, GRAB. Now, we talked recently about what's happening with electric vehicles, and today Tesla reported strong numbers, and some of these electric vehicle stocks have really been moving. But I want to just mention two that maybe are kind of potentially something people will be looking for. AEHR is a semiconductor testing company that is involved in making, people use them when they're making electric vehicles. I don't fully understand technically what they do, but I know that they have a very strong end market use case in EVs. So AEHR, and then the other one is the Chinese company XPEV, which is a Chinese EV maker. And also kind of interesting here to look at this. Now, remember, we were talking, a month ago about what was happening with some of the Chinese names like Baba and some of these sort of names, and they've really extended, but there are some that have not run as much yet. And so XPEV might be one of those. All right, now I'm going to just keep moving here. Another thing I've been seeing is solar energy has been running as well. When do we have it over here? It's on our, here you go. Look at TAN. Look in the last 21 days. TAN has been outperforming in the last, 63 days and 21 days. And so some of these names also, First Solar and Canadian Solar, CSIQ. These two have been kind of showing some strength. And again, something like this, it breaks out. And here, you might get 3 to 4 days of consolidation shopping, and then guess what? That blue line catches up the 8-day exponential. And if you're using your MA tools, it will light up. If you go and put it in a stock like CSIQ, you'll notice that today its 8-day EMA test is blank because it's not touching it. But maybe in 3 or 4 or 5 days, boom, it lights up, and that's that potential signal. So I want to just point out these tools are designed for these things. You see a stock rip, and then the moving average, it allows you to basically watch for it. You can set alerts if you want as well, but sometimes the moving average can be a way to do it. All right, so I'll also just mention we did some trading view ideas on names like Deere. Now these were to the downside, and sometimes in a bear market you actually get the downside trades work pretty well also, because the thing is it's a stock pickers market, and in a stock pickers market it works both ways. And the thing is, in a stock pickers market, people will actually be more likely to focus on the fundamentals of a company like TMUS, which have not been terrific. Now, I want to just mention, a couple months ago, we talked about what was happening in these legacy sort of telecom names like Comcast and Charter Communications and T-Mobile. We talked about what was happening, and these stocks are really in a spot where they have really struggled. And there's evidence of these guys having some real longer term issues, and they have lots of debt, which is great if you're bearish. So I just kind of point that out, or it can be great. It can be a useful thing because these companies have that ability for that debt to kind of just eat the entire kind of market cap, and you end up with a company that ends up with has to pay the debt, and investors don't want to see the earnings multiple, so the earnings multiple collapses. Then you end up with a stock where the enterprise value gets way bigger than market cap, meaning that debt is most of the value of the company. And that is something that can work if you like to be bearish and look for things that are in downtrends. And I think right now, T-Mobile, these guys are competing, or I should say that Elon Musk is competing with them. And we have a breakdown here that I think is interesting. People might want to look at. The other one is ServiceNow. I mean, this company is really in a spot where, also showing some, lower weekly highs and stuff like that. And some signs of kind of fundamental break of weakness. So I wanted to mention that. Um, also think it was interesting this week, if you look at the Institute for Supply Management report yesterday. I mean, the manufacturing report, the word tariff appeared about 1,000 times in that report. Almost everyone was saying how tariffs were hurting the economy and hurting business. Now, who knows? I mean, I've seen these reports, not always pan out, but it was interesting to see that. So I do start to wonder if, when you get away from big tech, as we get later in the year, companies are like, oh, guess what? Our profit margins are getting crushed. And the other thing is, if companies don't make money doing stuff, then they stop doing stuff. And when they stop doing stuff, they stop hiring people or paying people. And you get to a point, people say, you know what? This business maybe is not viable long term. And that could turn into job losses later. So then we have to realize now, and this could also hinge on the Supreme Court decision that we're likely to get. I don't know if it's going to even come this year. It might be in January. Remember, we said in November is when the the arguments begin in the Supreme Court. Nonetheless, the key thing is that there are signs in the Institute for Supply Management that the tariff issue is still coming down the track as a potential risk. I want to kind of point that out. Um, Okay, now a few stocks that were interesting today, more on the kind of end on a happier note. Things like AMD. So I want to point that out. AMD reports earnings on the 28th. Now, what would happen if someone went over here to Option Station Pro and they kind of said, let's take a look at the options for advanced micro devices. Let's look for the earnings date, which in this case would be the 31st of October, because you can see they report on the 28th, so that Friday would be the 31st. And a person would go down here and look at something like the 180 calls, and you could potentially click on that and then go on the ask and go down here to the 190s, hold down control and click on that. And you can see a vertical spread would cost about $2.50 for a $10 spread. So a person could potentially think about a spread like this, looking for the stock essentially to go to 190, which is not terribly far above its recent peak. And it did peak above that level you can see over here on the weekly. So I mean, a vertical spread of that nature would basically make about 300% from the stock going up to where it was, over here on the weekly. So I want to just kind of point that out with earnings coming and this kind of stock kind of breaking out today in this kind of rounded pattern. This is potentially interesting. Now, Baker Hughes, BKR. Now, this is an energy company that has an AI angle because they're doing different kinds of natural gas infrastructure for data centers. I want to just point that out. BKR. This is like, maybe like the most bullish potentially chart that I see in the energy space. You can see how it's clearing this high from February on the weekly. And this is also, I mean, you know, just want to kind of point this out. Pulling back near that 21-day exponential today, and this is one that BKR is popping up now. VRT. Now this is one of these AI names that has been kind of like forgotten about in this cycle. But last year it was a real outperformer, and then basically had this huge run in 24, and then tariffs came and people kind of forgot about it. But here it is breaking out to a new all-time high. This is one also where here it is hitting the all-time high today, kind of weak. If it moves sideways here and that 8-day catches up, that would also light up. This could be a potential application of using that 8-day EMA test to look for a name, to follow a name like that. Just some others I want to mention here are names like Meta, and Amazon. These could be names that maybe hold, but if they get some chops to the downside, some pushes to the downside, and they hold, people might want to look to be selling kind of next week. Credit spreads, things that can have that faster decay. I'm not going to get into it much more, but just to realize that if a stock like this were to kind of drop down, a person might be look to sell puts around, in something like Amazon. You could potentially people be selling puts around maybe 215, buying something like the 210s or something kind of like that, depending on where exactly pricing is. But in an environment like this with it holding, this might be something that people look to do in Meta and Amazon. Two last names I want to end with because of the recent strength in healthcare. I noticed this. Medtronic, MDT, these are not active, super active names, but Medtronic here is pushing up against a potential level on the weekly chart going all the way back to 2022. Maybe he'll look for that for a breakout. And then LabCorp, another not especially exciting name, but it is a name that is actually breaking out to new all-time highs. And here it is. What's it doing? It's hitting that 21-day exponential. So we look over here on our chart, on our radar screen, go to LH, and you can see, voila, 21 EMA lights up. That's exactly the way the people can use tools like this. So hit a 52-week high right here, and here it is 2 days later. When things hit 52-week highs and they kind of pull back a little bit, that is often kind of a way to think about following trends. So hope everyone has a great day. We'll be back on Monday for State of the Market, and hope everyone has a great day. And I'll see you next week and a great weekend.